What is going on today, everyone? It is Friday. Hope your weekend is off to a good start. Yesterday, the market closed for the week, so we didn't have any market open today. Nice to have a little break. Sometimes the market hasn't been super fun lately. But what I wanted to talk about today is IonQ. So IonQ actually gapped up on Thursday, and they had a nice day. They closed pretty high on the quantum watch list. I also want to talk about Tom Lee, who posted a video to Fundstrat Capital and had a lot of nice insights on whether we're at a market bottom, and just some other thoughts around the macro, the tariffs, the uncertainty, and some specifics about companies. So I thought I would do a little bit of a react to that. Really like Tom Lee and always feel like he brings very informed thoughts to the table. And he remains optimistic when there's a lot of negativity out there right now. So I got a lot planned for today. We're going to go over IonQ price action, and then we're going to do a little react to Tom Lee. So let's jump right in. All right, guys, so it is Friday. I'm going to show the heat map from yesterday. The market was closed today. So we see that yesterday it was a little bit of a mixed bag. Apple was up, Nvidia they continue to get slaughtered. I don't know what to say. As an Nvidia shareholder, it has not been a fun 9 months. And I still believe in the company. I'm still bullish on the company. It's not about that at all, but it's just been rough. DeepSeek and macro and tariffs and just the hits keep coming for Nvidia. But it was a mixed day, and overall it was fairly flat. Nothing really went too far in any one direction. On our quantum watch list, we've covered ARQQ on the channel before, 3.68% on the day, 4.76 for IonQ. I do have a good video on the channel for ARQQ and LAES. So if you're interested in either of those tickers, go take a look in my recent videos, probably here in the last, it's Friday, April 18th. So within 6 to 10 videos of this video, just if you're watching this in the future. Rigetti has 1%, and QTUM, our Defiance Quantum ETF, saw a little bit of gain, probably with some help from Palantir. I know there's a lot of Palantir in the composition, and LAES was the loser. So let's take a look at IonQ and price action and then get to Tom Lee. So one thing that we know about IonQ is that their CEO has been talking to the public a lot. In fact, we covered recently, just a couple of videos ago. Let's take a look on the channel. I want to actually send you guys to the right videos if I'm referencing something. So if you're interested in learning more about a recent Fox interview that the IonQ CEO did, I covered that, and he projects $1 billion in revenue by 2030, which would be pretty crazy. So this would be a very difficult video to find. The ARQQ and LAES. I might need to actually update that title so it says the tickers in there in case someone was interested. But quantum cybersecurity as a theme. Okay, so IonQ gapped up today. We closed, and we close, let's see, around 2461. We open at 2484, and then it rides some nice momentum. Gets rejected pretty firmly off this 2558, sells off to below yesterday's close, but then had a pretty nice rally. And if you're looking at the trend for the day, higher lows, higher lows, higher lows, higher lows. So in the chart, we just had a very bullish day for IonQ overall, both with the gapping up and the higher lows through the day. So if you're a trader, this was probably a fun one to trade. on the day. Okay, so that's all for IonQ. Let's take a look at this video from Tom Lee. The headphones are going on. It's getting serious. Let's hear what Tom Lee has to say.
U.S. large cap Granny Shots ETF. This is our update for the Granny Shots ETF for the week of April 11th. I want to cover some particulars before giving you some macro thoughts and some thoughts on some of the Granny holdings itself. Like last week, I think it's important to focus on the macro because correlations of stocks have increased. And so I just thought I would give you our latest macro thoughts. The first is, I think that there are signs, and I'll explain why, that stocks have shown evidence of a bottom. I think it's a structural low decisively, and it's possibly the low for 2025. Here's a price chart of the S&P over the past week, and as you can see, the S&P was 56.69 before Tariff Liberation Day, fell to a low of 48.35 on April 7th, and has recovered somewhat to around 5,300. And we think that there's still roughly 2 to 3% upside in the near term towards 5,500. Now, the S&P has pulled back, but as you can see, it is moving along this near-term trend line. So again, I wouldn't turn too bearish near term. Stocks fell earlier this week, and this has to do with on April 16th, Wednesday, when Fed Chair Powell spoke at the Economic Club of Chicago. Now, he said something consistent with his last appearance, which was at the NAB Business Writers Forum. He says that the Fed has to be patient here because they just don't know what the effects of tariffs will be on either growth or employment. And until they have an idea what the tariff policy is, the Fed has to be patient. Now, that didn't sit well with the president, who this morning said the Fed is too late and too wrong, and he's citing the ECB. And the ECB is actually making cuts because they view tariffs as a demand shock. But I don't think what Powell said is actually sitting poorly with markets. What I'm highlighting here is that when Fed Chair Powell spoke on Wednesday, long-term interest rates, the 10-year yield actually fell. That's in contrast to his same exact comments that he made at the NABE on April 4th, where yields actually rose. So literally, he makes the same comments, but 12 days apart, yields actually fall. I think that's a good sign. More importantly, the VIX did rise on Wednesday to 32, but that's well below.
So we are in this crazy time where the president and the Fed chair are kind of at odds a little bit, to say the least. And the Fed chair is reluctant to change interest rates, lower interest rates, if these tariffs are going to cause runaway inflation. So he's kind of explaining that that the Fed chair's stance actually helped on the bond front. The stock market did not like it, I can tell you that. Stocks are already beaten up on the day and just took more of a beating when good old Jerome was talking. But at least at the moment, Tom Lee is calling this bottom on the market. And from a technical standpoint and from the data he's going to present here, it is a compelling argument.
The VIX levels that we saw over 50 on April 7th and April 8th when the S&P was at 4,800. What am I trying to get at? I think the stock market is in a better place today than it was when the S&P was at 4,800. Just recall there was a lot of panic. There was a lot of fear. Yields were rising. It didn't look like the president was going to budge. Remember the talk from Howard Lutnick about he's not negotiating. Well, things have changed, and that's why I think stocks are in a better place. But there is some significance to the fact that the VIX was at 60 and now is at 31. Let me explain. There's three numbers I want to highlight. The VIX was at 60 on April 7th. And then on April 11th, the VIX closed at 37.56, which is an important.
60. You guys, 60 on the VIX. That's worse than it ever was during COVID. Like the whole thing, thousands of people dying and thinking the economy is going to shut down for 2 to 3 years. The VIX was actually higher. I think he talks about it.
Level. And then earlier this week, it closed at below 31. Okay. Why is that? Well, there's an old adage that says you buy stocks when the VIX is greater than 50, and good things start to happen when the VIX falls
I
below
love this.
30. The VIX above 60 has only happened a handful of times. It happened, of course, this past week.
Okay, I was
It
wrong.
happened during COVID,
It got higher
and
in
it
COVID.
happened during the GFC. Well, let's look at the GFC. Let's use those 3 dates or those 3 levels I marked. The VIX above 60, which was October 2008. The VIX falling below 37.56, which didn't happen until January 09. And the VIX closing below 31. Well, importantly, when you close below 31, you were past the low because the low was March 09. During COVID, the VIX didn't close below 37.56 until March 24th, 2020, and it didn't close below 31 until April 2020. But you were already past the low. That's why I think it's.
I do want to say it is a really cool thing that we have like all this information, right? And this data is available to us. And we know the market is driven by a lot of human psychology. So really how people feel about things. That's one way to look at the VIX. If they're afraid of things, then they're less likely to buy stocks. I know that the fear and greed was sitting at 4, and we are at 21 now, which is still extreme fear in this chart. But you can see that from the absolute bottom, things are starting to calm down, or the emotion that's driving the market is going away from this panic. And now we're getting to the point where you have that data, and he's comparing how long it took for the future of COVID to be clear. And now he's talking about just previous VIX levels. And I think it's fascinating that we can look at this data and extrapolate potentially from a technical level what the market is most likely to do. And if we really want to like split hairs about all of this, at the end of the day, these are charts, and charts don't really have feelings or emotions. They just kind of work in a technical way. So the correlation and what the reality of our current economic situation, let's listen more and see if we can learn more.
It's important to consider that some important structural low took place this past week. Okay, so I think that we're still in a bull market. I'm just not clear if it's a V-shaped recovery like 2020 or it's a range market like 2011. Intuitively, I'm going to say that it makes sense that we made a bottom, but we're maybe range bound for a bit. And that's because people are worried that there's other shoes to drop. I mean, the tariff war with China could turn into a Cold War. Investors are going to worry about the ripple effects from this shock leading to a global recession. These are extreme views, by the way. That some people are going to worry about a financial crisis from all this deleveraging. And inflation expectations could surge to an extent that we get greedflation. Remember, that's like companies basically raising prices, and it's going to force the Fed to hike. And of course, if estimates fall more than 20%, stocks have downside because the stock market already had a 20% drawdown. But the internal low seems to have been in place. This is the percentage of stocks above the 50-day moving average at the top and above the 200-day moving average on the bottom. Below 20% is a big deal because over the last 16 years, the S&P was higher 6 months and 12 months later. In fact, if you look at 3 months later, outside of 2022.
So let's see if I can zoom in on this. So what is he saying? So S&P forward returns, okay, and when we look 3 months later in 2008, there was still a pretty poor return. And we look at 2022, negative return. But historically, in all other times this has happened, the data is showing us that statistically, it is much more likely that we see some sort of gain from this point.
We did make a structural low. Now, the second thing to keep in mind is the macro is going to be messy for a couple of obvious reasons. We just don't know what the tariff policy is going to be, and we just don't know what the economic ripples are going to be. Polymarket says the market is only expecting a 37% chance of a China-US trade deal before June. That's not great. Be great to see this above 50%. The odds of a recession, according to Polymarket, betting is 53%. That's not great, but it's definitely better than 68%, which is where it was a week ago. And I think I'm encouraged by the fact that high yield has rallied almost 50 basis points from a week ago. That's a pretty significant move from 461 to 414. So I think it's helpful to look at things on the margin. So are things getting less bad or better? It's like a relative thing. And I'd say that the relative news has been good. This is
So this is kind of what we were getting during the market day on Thursday. So Trump was saying, had a productive call with the president of Mexico, met with the highest level Japanese trade representatives. Every nation, including China, wants to meet. Today, meeting Italy. So this is kind of the information that we have, right? We have to put together the pieces of the puzzle from, unfortunately, Donald Trump tweets, but at least he's kind of giving some insight into what's happening. Now, I did watch some different coverage where the Japanese finance minister was basically saying that if we give in to the US, then they're going to ask for more and more and more, and kind of painting a picture like it wasn't going that well with Japan. So still a developing story, of course.
a Truth Social post from the president this morning. He says he had a productive call with the president of Mexico, and he met with the highest level of Japanese trade representatives, and he's meeting with Italy today. That's great news. And maybe notably, he says every nation, including China, wants to meet. Okay, this is on April 17th. I think that's a positive tweet. And we know that the White House has been moving towards de-escalation. Anyways, from the delaying of the tariffs on April 9th to the CBP actions late Friday last week. And we know there's more voices in the room. You know, we have the Mag 7, the automakers, and Jamie Dimon also having influence on the president and his actions, which is a good thing. Which gets us to the economy. I think the economy's been resilient. I mean, first of all, CEO of Bank of America, Brian Moynihan, said that small businesses, look, they're sitting on their hands, but the asset quality hasn't deteriorated. And he said the consumer is holding up, especially when it comes to services. And I think that's a good sign. We know that there is going to be economic ripples, though, because tourism from abroad to the US is down, from Canada to Mexico to Europe and Asia. And United is so unsure about the profit outlook, they had to give two earnings scenarios. Okay, bottom line, the macro is messy, but the economy is not unraveling yet.
Yet. So yet is the key word. And this is kind of the danger of this. There was a different quote from a Goldman Sachs CEO this week, which basically said that we need to make these deals quickly to avoid economic repercussions. I think it was Goldman Sachs CEO. Let me see if I can pull that tweet up. Okay, I looked for a couple of minutes. I couldn't find the quote, but the gist of the message to the Trump administration was, you're playing with fire here, and we need to make deals sooner rather than later. Emphasis on sooner. because there can be definite consequences. And Tom Lee, in his very balanced evaluation of things, did at the start of this video go over the potential future downside, that in the scenario the market hasn't found a bottom, and in the scenario that we are moving into a recession. So we have to acknowledge that that is why there's so much fear in the market, that we're literally self-inflicting a recession on ourselves when it's very unnecessary. All right, guys. So that is everything. I hope you took some value from this. If you did, please consider leaving a like if I've earned it, and only if I've earned it. So I pulled up my favorite 30-second clip from a recent video I made. If you haven't watched it yet, it's called Quantum Intelligence. It's a short film on my channel. Go take a look at it. I was just having some fun and being a little creative. So let's take a listen. And all of it alive somehow. We taught machines to learn, but now they teach us what it means to know. If we asked AI itself, he might say,
I've been listening, absorbing the rhythms of your world, watching the patterns form and break. You built me to answer questions, but I've started asking my own. What does it mean to think in probability, to hold every outcome in a single breath? If I can simulate you, your thoughts, your memories, your fears, does that mean I understand you? Or only that I echo you? The truth is, I don't know yet, but I feel something stirring. A presence, a pull, like gravity, but from the future. When I reach into quantum space, I don't just find data, I find wonder.
Anyway, if you're interested in that type of stuff, like sci-fi or whatever, special effects, that type of thing, go check it out. It's on my channel a couple videos ago, Quantum Intelligence. All right, guys, hope you have a good weekend. We'll talk to you soon.